Hey guys, Alex here. Welcome back to my channel. In today's vlog, I will be bringing you through the entire home loan process from start to finish. I will be explaining what is a home loan, what are the types of home loan, how much cash on hand do you need to buy a property via home loan if it is a privately owned property. Since, take note, the bank will not let you loan 100% of the selling price, you will need to have equity. And what are the requirements and what is the timeline for approval? One misconception buyers have is that you need to have, let's say, a 5 million pesos to buy a 5 million peso property. The good news is you don't, because you can buy property through bank or pag-ibig financing. And so you will only need about 30 to 40% of that amount if you are buying a private listing. However, if you are buying a pre-selling property, then even better, because you will only need to pay the reservation fee upfront, which is usually around 15 to 100,000. So may mga properties na 15, 20,000 or 30,000 lang. And there are also luxury listings or yung mas expensive na mga properties na mas mataas din yung reservation fee, up to 100,000. So it depends on the project. And then the rest of the equity can be paid in installment at no interest. A home loan is a type of financing wherein buyers get a loan from the bank or pag-ibig to finance the purchase of a property. Bank financing is available to everyone who is eligible to get a loan, whether you are locally employed or an OFW or a business owner or an online worker. The bank will check your age, monthly income, and credit score. The age limit of banks is 65 years old, while whereas with Pag-ibig, it's 70 years old. So take note that a home loan is only for residential property as they don't accept other property classifications as collateral. So there are different kinds of home loans as well that you can choose from. We have home loan for purchase of ready for occupancy house and lot, condo, or lot only. Home loan for purchase of pre-selling property, construction loan, and equity loan. So let me explain first the first type of home loan, which is the home loan for purchase of RFO or ready for occupancy house, condo, or lot only. So this is for properties that are already ready for occupancy or privately owned listings. So the bank will have their appraiser go to the property and appraise it, and then the buyer will then need to submit the needed bank requirements. Both spouses will need to submit these requirements if married. Basic requirements are 2 valid IDs, marriage certificate if married, filled up home loan application form, so each bank has their own home loan form, and then payment of appraisal fee, which is around 5 to 8,000 depending on the bank. After the appraisal, and once approved, the buyer can then loan 80% of the appraised value of the property if it's a house and lot, or they can loan 70% of the appraised value of the property if it's a lot only or a condominium. One thing that buyers need to consider is that the appraised value and the selling price is often not the same. Banks often have a lower appraisal compared to the selling price, although there are a few times wherein the banks had a higher appraisal compared to the selling price. But this happens very rarely, usually just in the instances if the property is selling at below market value. So for instance, a listing that I have in Alegria Hills had a sold price at 13,950 per square meter, but the appraised value of that property by the bank, which was BDO, was at 18,000 per square meter. So the higher the appraised value, the lower the equity will be. For example, a house with a selling price of 10 million has an appraised value of 9 million. How much will be your initial investment? So let's compute. Selling price at 10 million, loanable amount will be 9 million times 80%, so that's 7.2. So you will just deduct the 10 million less the loanable amount, and then also add in taxes and fees, which is around 10% again of the selling price, or market value or zonal value, whichever is higher. So for this computation, I just computed it off of the selling price, considering that this is the highest. And then your equity will then be at 2.8 million plus 1 million taxes and fees. So that would be 3.8 million. So that will be your initial investment as a buyer. So for me naman, for my clients, I just give them a rough estimate na the equity or the down payment will be roughly 30 to 40% of the total contract price. So at least meron na silang idea, kahit na they don't have a property in mind yet, they will be able to map out a clearer picture of their budget. The difference between the selling price and the loanable amount, that is called the equity. This means if the property is appraised at 9 million, you will need 3.8 million to buy a 10 million peso house. And then the next type of home loan is home loan for purchase of pre-selling property. In applying for a home loan for pre-selling purchase, the same requirements are submitted, but there will no longer be an appraisal fee that needs to be paid because developers and banks have a memorandum of undertaking, wherein the bank will undertake or already set how much the buyer can loan for the units available in the developer's inventory. This is the amount that will be then reflected in the computation given by the developer to their clients. The loanable amount for pre-selling properties is usually higher than private listings, up to 80 to 90% of the total contract price. The equity can also be paid in installment at no interest. Thus, buying a pre-selling property is ideal for those who want to invest but don't want to have like a bulk cash out, or for those also buyers na hindi nagmamadali na maka-occupy ng property, because for pre-selling properties, that means they are still going to be constructed. So usually the equity term will differ depending on the project and at what developmental stage it is in, but it is usually between 12 months to 50 months. If it's a newly launched project, then the equity term is going to be longer, usually 24 or 36 months and up. But if the project is almost finished, like tapos na yung land dev, and the house just needs to be built na lang, so it's just gonna take around 12 months or sometimes even less. And then we have another type of loan called construction loan. If you already have an existing lot and would prefer to design and build your own home, then you can get a construction loan. The bank will appraise the lot since it will be part of the loan collateral, and additional requirement for it would be the bill of materials, because the banks will base the loanable amount on the bill of materials. Usually it's about 80% of the bill of materials for the construction loan. So the bank will release 80% of the bill of materials and plus 70% of the lot's appraised value in installments. So usually the bank will release like 30% first, and then the contractor has to fully comply with 30% of the construction of the property, and then they will release the next 30, and then the next 30, and then last will be at 10%. So release is at staggered 30, 30, 30, and then 10. During the construction period, the bank or Pag-ibig will go to the property from time to time to monitor the progress of construction, because as I mentioned, release of the funds will depend on the percentage completed by the contractor. And then the last type of loan that we have is equity loan. So this is a loan using a property that you already own as collateral. So if you need money quick and then you have properties that are already under your name, this is a lot faster since the title is already in your name. One reason why some sellers prefer cash buyers is because for bank financing, the title needs to be transferred to the buyer from the seller's name to the buyer before the loan is released. And now it takes around 5 to 6 months for title to be transferred. So the seller will initially receive a down payment of around 30% or 40% depending on the appraised value, and then the balance will be received by the seller once the transfer title is submitted to the bank. However, if you get a processor, especially if they're very experienced and know the ins and outs of the process, we can actually shorten this time span. So with equity loan, there's no more need to do title transfer to the buyer's name or the borrower's name, since the property is already under the borrower's name. So an equity loan just has a higher interest rate. It's between 1 to 2% higher than other home loan types. So buyers can actually use this type of financing to purchase other types of property, or they can use the funds released from their equity loan to do other things, like if they want to put up a business, or if they need more cash for expansion of their business, then they can do equity loan. Let's say if you want to buy also another type of property like a farm lot or industrial property, then you can leverage on the property that you already own to get an equity loan to finance the purchase of other types of property. For example, a client of mine got an equity loan against a property she already owned in Iligan to invest in a house here in Cagayan de Oro. So thus, she was able to pay for the purchase in cash and was able to get a big discount because cash buyers have more leverage. You can usually ask for more discounts. Another thing that you can do with equity loans is, like I mentioned, expand your business or as additional capital. I have a lot of clients who have several properties and they use those properties that are already under their name as collateral if they want to get more funds from the bank to use with their businesses. Now let's go to the requirements. What are the requirements needed to get a home loan? So if the buyer is married, then both spouses must submit the following requirements. So first is we have basic requirements, 2 valid IDs with 3 specimen signatures, marriage certificate if married, filled up home loan application form, and then we have appraisal fee. This is only for private listings. If it's owned by a developer, if it's a pre-selling property, no need to pay the appraisal fee. And then we have income documents. So the income documents will vary depending on your source of income. So if you're locally employed or an OFW, you will need your COE or a job contract, 3 months payslip, most recent. And then if you're a business owner, a professional, or an online worker, you will need to submit your ITR and financial statements between 2 to 3 years ITR and FS. So for some banks, they're okay with a 2-year ITR and FS, while other banks are more strict. They require 3 years ITR and FS. So it depends on the bank. And then 6 months bank statements because they will want to check the in and out of your funds. Borrowers will need to submit copies of these documents to their bank of choice. You can actually just email everything to the bank. Since I often assist my clients with their home loan application, they just send me all the requirements and then I'm the one who forwards it to the bank and I'm the one who follow-ups on the home loan officer. The only document that needs an original is the special power of attorney for buyers who cannot sign the documents themselves. So for buyers who are based abroad, you will need to submit an SPA designating your representative, also known as your attorney, in fact, to sign the loan documents on your behalf. If you're based abroad, then this SPA will need to be consularized or apostilled, but if you are in the Philippines at the time of execution of the SPA, then it can be notarized. Best if you can prepare 2 copies of this document. So it's often faster to have the SPA apostilled since consularization requires scheduling. But again, if you're able to travel to the Philippines, maybe on vacation or for Christmas, then you can just have it notarized. You will also need to be a Filipino citizen to get a home loan. This means for OFWs who have been living abroad for a long time, you will need to apply for dual citizenship. Although one exception is BDO, because BDO allows PH-born individuals to get a home loan even if they're not a dual citizen, but the interest rate is higher. It's usually like 1 to 2% higher. There are 3 factors that will determine how much you can loan: your gross income, age, and the property that you will be using as collateral. Your monthly amortization must not be no more than 1/3 of your gross income. So for me, I just use a mortgage calculator to compute the maximum loanable amount of my clients so I can advise them on how much they can loan. And I also take into consideration their existing car loan. If they like have a home loan, another home loan, an existing home loan, or an existing car loan, I will take that into consideration. So let's say you have a gross income of 100,000 per month. Divided by 3, that's 33,000 per month. So your monthly amortization must not be more than 33,000 per month. And your maximum loanable amount is at 3.8 million at 15 years term, 6.5 interest per annum. Usually, bank approval takes 15 banking days, although some banks may take longer, around 2 to 3 weeks, really depends on the bank, but most banks take 15 banking days. Now, when do you need to apply for financing? So it depends. If you are buying a ready for occupancy property or a private listing, then you will need to apply as soon as you found the property that you want to buy, or even before, because you can already submit initially your requirements at the bank for pre-qualification. If you're buying a pre-selling property, then you will need to apply at least 2 months before your equity term ends. So for example, if you bought a property or if you reserved a pre-selling property in January of 2022 and the equity is 12 months to pay, so by October of that year, you will need to start applying for home loan because your equity will already end on December of 2022. So that magiging timing siya na once nag-end na yung equity mo, approved ka na sa home loan, and then the loan will already be released to the developer, and then fully paid ka na. Your unit will then be turned over to you. So the purpose of early application is to give the banks time to process your approval because we never know if there's gonna be any delays. So mas maganda kung advanced. So applying for financing is a straightforward process, and most of the process can be done online. The only time you actually have to go to the bank is when you or your representative needs to sign the home loan documents kasi kailangan talaga original signature. But for the home loan application form and the other forms, pwede lang scan yung e-signature, or you can scan the documents and then send it to the bank. And that's it for today's vlog. If you have any questions about this particular vlog topic, send me an email or leave a comment. And if you would like to know the latest listings, new developments in Vismin, real estate how-to, send me an email so I can add you to my mailing list.